Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and we've gone into so many of the big banks lately that are in the red year to date, and places like Deutsche Bank, which of course is really standing out, how it's laying off about 10,000 workers this year, and it's looking at laying off more than that, but that's 1 in 10 of Deutsche Bank's workers.
Were you saying Deutsche bankrupt? No, sorry, Deutsche Bank?
Yeah. And on top of that, they've been just downgraded by the S&P to BBB+ from A-, which is a big deal overall. And obviously, Deutsche Bank has been seeing its shares hit low after low after low. And it saw a little bit of a rise. It'll continue going down. Look at the overall chart for Deutsche Bank going over 10 years, and it's just absolutely astonishing. And of course, the banks have never recovered since 2008. They're almost all insolvent. We've seen that with the cash to deposit ratio, which really stands out, which with a lot of the banks having as little as 0.15% of deposits covered in cash, which is insane. And of course, with JP Morgan going into the red year to date about a week or so ago, that has officially led to us being able to say with a completely straight face that all major banks are in the red year to date. We won't even go into Italy right now, or will we? We'll find out later on in the video, because first I'm going to go into this article from The Street that shows Deutsche Bank chief in talks with stakeholders about Commerzbank merger. Deutsche Bank AG chairman Paul Achleitner, who is like the millionth CEO replacement in the last couple years, has spoken with top shareholders as well as investors and key German government officials in recent months about merging with local competitor Commerzbank AG, Bloomberg reported, citing the people familiar with the matter. Standing in the way of a deal is Deutsche Bank's depressed share price, with investors telling Achleitner that they don't want a merger at the moment because it would be highly dilutive and potentially trigger a capital increase and large write-downs. Bloomberg reported the people as saying. Talks between the two banks in the summer of 2016 about a deal didn't advance as the companies focused on restructuring their own businesses, a person with knowledge of the matter said at the time. Deutsche Bank's American depositary receipts rose as much as 2.7% and traded 1.9% higher at 2:15 p.m. in New York on the date of this article, which is, it's kind of funny because they always try to prop it up like it's not as bad as it seems. Keep in mind, they're talking about 2016 there, these talks back in 2016, at the same time as Deutsche Bank's derivative exposure was about $75 trillion, which is the entire GDP of the world. And of course, Commerzbank isn't doing so well, is it?
No, it definitely isn't, and it's not as bad as Deutsche Bank, of course, but you got to look at this way. Deutsche Bank only have $45 trillion now in derivatives, so they've done very well. They're going to be safe. Don't worry about it. Deutsche Bank is one of the worst criminal banks out there, but of course there's worse banks out there as well. The Canadian banks are a lot worse shape than the Deutsche Bank, in my point of view. I done a lot of research on the Canadian banks, and then you got several other banks across Europe. Talk about Italy. We haven't talked about Italy. Italy's struggling. A lot of banks. We report on the whole wide array of banks all across Southern Europe that are in a huge disarray right now.
Absolutely. We've gone into Monte dei Paschi, one of the world's oldest banks, and of course we've seen lots of problems there. We've seen a lot of issues coming from Italy recently, which we reported on, and how it affected U.S. stock markets, etc. And the fact is, the global banking system is seeing severe problems right now. And this talk about Deutsche Bank merging with Commerzbank, the fact that they are talking about it, we've heard this before. Oh, well, we're just talking about it. It's nothing. It's not a big deal. These things end up happening. It's bound to happen because these banks need to merge in order to save themselves. And speaking of Italy, we were talking about Monte dei Paschi many times before. Well, UniCredit is now pushing for a merger with Societe Generale, according to Financial Times reports. And as this Bloomberg article says, Italian bank UniCredit SPA is considering a merger with France's Societe Generale SA, a move that would combine two of Europe's largest financial institutions, the Financial Times reported Sunday. UniCredit Chief Executive Officer Jean-Pierre Moustier, who is French and once worked for Societe Generale, has been developing the idea for several months, as the Financial Times said, citing people close to the situation. Societe Generale directors have also been studying the possibility of a tie-up, the Financial Times also reported. So this is another example of another bank potentially merging with another one, both in a crisis at the moment. John, what is this all leading to?
Well, what you can remember about Unicredit, of course, it's in crisis, but also Societe Generale. In my book, I talked about the Greek debt, and the Societe Generale is the ones that have the most amount of Greek debt. So these banks, these big banks, that have been used by the ECB to bail out everybody else in Europe. It's been the big, French banks, the big banks in Netherlands, in Germany, the solid banks, as they call them, but now they're looking at not so good because they've been, doing all these bailout schemes, and now it's coming back to them, all this bad debt that they've been, shuffling out everywhere in order to try to save the economy. And what we're seeing here is just a normal, way of a collapse of a banking system, because people are finally starting to see through this whole fractional reserve lending scheme that they got going.
I wanted to actually go into that with you, John, because of course, as we always mention, if your money's in the bank, it's not yours, it's a bank's. So obviously, putting your money in the bank, you're loaning money to them. And with the bail-in regimes, etc., especially with Mario Draghi talking about getting rid of depositor insurance, they could just steal that money out of your account. And even if there was that insurance is so minimal that it's almost nothing. But John, I wanted you to go into how the central banks create these issues in the first place at these banks.
Yeah, okay. So how it works is, of course, the ECB created these funds, emergency funds that they had. So first of all, they got to create money somewhere, and it's through creating bonds. And how those bonds are created is by going into debt. So the debt then gets created and then deposited into a bank account. So let's say they took out $100 in debt, the ECB, the European Union, and then they deposited into, let's say, Societe Generale or Deutsche Bank or whatever big major institution that they use. And then that $100 can now be then lent out to everybody else. Actually, you don't even lend out the $100. What they do is they take out a $9 excessive reserve. Actually, in most countries today, they don't even use fractional reserve banking. They got zero reserve policy, which is just the bank are just allowed to have whatever reserve they feel like it's good for them. But yeah, anyway, so they take then the $100 gets deposited, then they take excessive reserve $9, then $91 get created on top of that. So now it's $191 in existence just in the first transaction, and they continue that transaction, and then the 91 gets deposited, and then it's less money that in the excessive reserve, then some money there, and they just continue that cycle all the way until they have $1,000 created out of that $100. So 10 times more money it gets created in the financial commercial banks from the debt that they used, the central bank issued in money that got deposited into the bank.
Sounds like a whole lot of IOUs.
Sounds like a Ponzi scheme to me. And that's exactly what these banks are doing. It's a massive Ponzi scheme. They create money out of thin air, and then they got to have more and more idiots coming in, borrowing money in order to feed the interest that they need to get paid on top of it in order to keep the system afloat. And that's why you see bankruptcy, mass bankruptcies in sectors and everything when you hit a certain peak of debt in any sector of the economy. It's because of that there's no more people to pay the interest that they have to pay in order to keep the system afloat.
And explain how that kind of led to what we saw with the Lehman Brothers and how this can affect us with these coming banking crises.
Yeah, how it so let's just do a quick rundown of how the Lehman debacle happened. So there was Countrywide and a whole bunch of other banks that borrowed a whole bunch of money to people that couldn't afford it in the United States, about $13 billion. Now, what they did with those assets was that Citywide and others, they took those assets off of their balance sheets and that's what they do. That's what they keep on doing now with derivatives, is they use what's called special purpose entities or special purpose vehicles. They bundle then a whole bunch of mortgages into those entities, which are legal entities. So they literally like write off and put it in a different corporation, basically. So it's off the books. It's away from them. It's not responsibility anymore. And then what they do is they take and create shares out of that through collateralized debt obligations, which they tranche a whole bunch of these vehicles and entities together in different tranches. And then you have better ones, like AAA rated, which is like bullshit. and then you have, of course, other lower mortgages in there. And then
Let me just explain quickly in the most simplistic terms possible for a CDO, collateralized debt obligation, which is just bundling, say, 100 or 97 bad mortgages together and 3 good ones, and putting that all into one big basket, and then saying, let's rate it by the top 3, and then you basically end up pawning off all these terrible mortgages on people, and they end up getting screwed, and it creates vast problems in the future.
Yeah. Well, the problem is they weren't even AAA rated. You can't AAA rate a mortgage. That's like utterly insane. That's what BMO just recently did here in Canada. So it just tells you how much collusion it is with these rating agencies, trying to rate investments.
And Wells Fargo is looking at doing the same thing. Actually, they have been kind of returning to that old practice again, which we saw in 2007.
Oh my God, I'm just like speechless, talking about this, because I get so infuriated talking about these idiots at Wall Street and these banksters running the economy. Now, of course, what they did with the collateralized debt obligations, then they sold them to financial institutions. They sold them to pension funds. We saw pension funds in Norway blow up because they failed. And then, of course, what they did is they took up bets on their own investments that they sold to everybody else and bet against it because they knew that it was going to fail, because they knew that it was garbage mortgages that they packaged in the first place through credit default swap, which is basically credit the default insurance. But in order to get around, it was actually Blythe Masters that created this back in the day. And in order to get around, not being regulated under the Insurance Act, they called it a swap instead of insurance. So this insurance is insane because it's like 100 people can now insure your house, and then it burns down and 100 people get paid out. That's why AIG went bankrupt. So yeah, that's the rundown of what happened there.
Well, and I wanted to go into, so right now we have this huge problem where we've been reporting on it. For example, pensions, the unfunded liabilities, the fact that the shortfall for pensions could reach as much as $400 trillion by the year 2050. I think it'll happen long before then. In fact, there have been reports talking about how Social Security will go down by the year 2026. I hate to put dates on it. The fundamentals are off the table due to the level of manipulation. So you can't put a date on it. You just know it's going to happen. It's inevitable, and you have to get prepared for it. But that's just one example. The banks are all insolvent.
Yeah, that's the government's numbers, by the way.
Yeah, and the banks are all insolvent, and it's just, we're seeing what happened in 2007, 2008, 2006, 7, 8. On steroids. It's unbelievable how much worse it is right now, but everyone's just sitting there going, la-di-da, I didn't see anything, nothing bad has ever happened, and everything will be good forever, because they tell me that everything is going to be good forever, and I'm supposed to just have these glassy eyes of, euphoria, of confidence in this market that has crashed a million times before and has always dragged everyone's feet into that bottomless pit of debt where you're forced to ask for a ladder up from the government and the banking system pushing you into perfect servitude to them.
Well, the real terrorists in the world is not the ones that are coming strapped on with bombs and running around and blowing up people. It's the financial terrorists. It's the guys on Wall Street that are, creating these banks that are financially destroying people, humans. Look at Greece. People taking suicides everywhere because they had lack of money, because they lost everything, because of the banksters. Goldman Sachs, for example, that got Greece into the European Union through some alternative bookkeeping rules that they created. So it's just all these banks, they're scamming every single time. And now, of course, it's not just mortgages. Now they have their auto-backed securities, and they have their collateralized loan obligations, which is a whole bunch of corporate bad debt that they package, and doing the same scheme over and over and over again, just with different packaging. Well, of course, here in Canada, they're doing the same because they're stupid, the banksters. But it just baffles me and infuriates me, because now we're looking at, I'm writing a book currently, and I go through like the past, the present, and the future of money, and I gotta go through I'm in the past currently. I'm writing in the past, and it just infuriates me because there's story upon story upon story upon story upon story about banks going bust because of these schemes that you currently see in today's modern day banking. It's just that they were modernized a little bit.
Yeah, absolutely. And Just finishing it off, of course, it's so important that people are self-sustainable and financially independent and responsible, as of course responsibility is a hallmark of freedom itself. So people have to be independent and not be dependent on those who are dependent on their dependents. And individuals need to look towards food, water, shelter, self-defense. So you're not gathering things for the toughest guy on the block. And of course, gold, silver, cryptocurrencies that have fundamental value, that are properly decentralized, that have a reason to exist. Of course, that comes down to your due diligence. This is our opinion, not investment advice, of course, but people need to be able to break free and do their own due diligence and be independent rather than a dependent slave of the banking system, eating grass on the farm, thinking all is good, surrounded by that cage until they're led off to the slaughter with a smile on their face. John?
Well, I call what you just said historical advice, because that's what history tells us. That is a smart idea to do. Now, anyways, I just want to finish with one last thing about the big scam bank of it all. It's the Federal Reserve that controls everything in this world. And of course, they're owned by the local, there's 12 branches. They're owned by every single local bank in those 12 districts that they have. And they pay 6% per annum in money. And they say, oh yeah, most of it goes to the treasury. But of course, these banksters, they get a fair share out of all that money. And they will continue doing this until they sucked you dry of blood. They're like a vampire squid, as Max Kaiser said, just sucks everything out of you until you're white and pale and are dead. And then they move on to the next victim. And then they will continue until we actually stop them and get our way out of their system.
Absolutely. Decentralize everything. Of course, rule yourself. And folks, don't die on your knees. Thank you for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change. Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube as the ADL comes in and flags all of our content as hate speech. Also, check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also find us at steemit.com at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in Steem, the cryptocurrency. And also find us at the Red Pill Expo, which we have a reference link for below in the description and the comments as well. Hosted by G. Edward Griffin, amazing speakers coming out to speak this year. Don't miss it. It's in Spokane, Washington, June 21st to 23rd. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.